Welcome back. You're tuned in to Bazaar Morning Call and hope you're having a good morning. Well, as promised, let's get straight to the stocks that we're tracking for you. Our research team is standing by with CNBC-TV18 top stocks for the day. Manglam, you go first. Tell us on TCS.
Well, I'm filling in for Rima, and it's interesting for TCS. A couple of days ago, we got an announcement that one of their deals were cancelled, but now they've gone ahead and added another deal to it itself. They've expanded their strategic partnership with Nest. The initial deal value is roughly £840 million over the next 10 years. But if this deal were to be extended to its entirety, it could be actually about £1.5 billion over the next 18 years. So that's a positive. And remember, the IT stocks, large cap IT stocks have been well bid over the last few days. TCS itself ended at the high point of trade yesterday. And at the same time, this week itself, it's up around 2.5%. So expect some extension of these gains coming by on TCS.
Okay, got that, Manglam. Thanks very much. So TCS on our radar for sure. As will be Z Entertainment. We've got Surabhi joining in. Surabhi, morning. So the flip-flop continues. But now we have, a word from the man himself, Mr. Puneet Goenka.
Yes, that's right. So he has interviewed with Mint, and the report states that, and he says in the report that merger is the utmost importance of him, and the merger should go irrespective of whether he is the CEO or not. He further adds the merger will benefit 96% of the shareholders. Therefore, it is in the larger interest of the entire ecosystem if the merger goes through. So that, along with Sony's statement yesterday that they are committed to this merger, will bode well for Z today.
Okay, the Sony story was a source-based story, which is, of course, from yesterday. But this is, of course, on the record, Mr. Goenka saying that with him or without him, the deal is on, and I think that should relieve markets quite a bit. The stock sold off day before yesterday by 6%. It recovered almost 8% yesterday, and I think it should sit up and take notice to this interview in the papers as well. But Nimish is now with us. Nimish, morning. It's raining block sales, right? Blocks after blocks. It's difficult to keep track. I mean, so many of them.
Absolutely, Prashant. We saw large
gets
blocks.
to sleep.
We saw a large block yesterday. Again, last evening, two blocks got launched. The first is Sansera. In Sansera, a large private equity investor is selling 14% of the company's equity via block deal. I understand the demand is strong, but the price indication is between 800 to 840, which means up to 5% discount. Need to see how the deal gets executed, whether in the pre-open or in the open market. But the demand is strong is what I understand, but I'll go with the red because there is a up to 5% discount in today's block. So that's first one. The second one is Delhivery. Even in Delhivery, there is a large block. Carlyle is looking to sell stake worth $86 million via block deal today. The price indicated is 385, which means only a 0.5% discount. So it looks like this is going to get executed in the block window, and hence I'll go with green on Delhivery. Last lot from Carlyle, it's a clean out trade. So you could see a bit of green in Delhivery. But for Sansera, need to see how the stock gets treated, how the deal is done, whether in pre-open or post-opening.
Nimish, any sense on the Aptus block deal yesterday? Do we know what happened there? I mean, there was a large block at open, right?
Yes, it's part of the disclosures as well. So the private equity investor was the seller in yesterday's block, and a couple of domestic funds bought. So largely it's been reported in the block deal as well, and this was expected. I guess even in Aptus, this looks like it was a clean out trade from the private equity investor.
Okay, all right, Nimesh, thanks a lot for that. Raining blocks. Hopefully it rains as well because, we've been waiting for the monsoons. But Manglam, let's go back to you. Tell us about Allcargo Logistics as well as LTI Mindtree.
Well, for Allcargo Logistics, it's the monthly business update that has come by, and there has been some slowdown. In fact, their less than container volume growth, which is basically a more profitable business for them, saw a 5% decline in volumes year on year. Month on month, though, there was an increase of about 3% The company said that container utilization has declined due to inventory destocking. The same time last year, people were stocking inventory ahead of COVID uncertainty, and now that seems like a distant memory. Full container volume growth, however, has been weak both month on month and year on year. There's been a decline of about 11% year on year and 4% month on month. So see some red on Allcargo Logistics. And LTI Mindtree, this is interesting because you remember the time when software was famous, a lot of companies would come up with software, .com was famous, platforms were famous, and now AI is famous. So they've launched a generative AI platform called Canvas AI. This will, of course, help enterprises jumpstart their business and scale generative AI capabilities. But AI generally, has a potential of increasing global GDP by 7% as per a Goldman Sachs report. So this is a positive for them. And the total AI market size actually currently close to around $165 billion in just 7 years could cross $1.5 trillion. So it's a huge market potential. But then again, it's artificial intelligence. A lot of people will enter here as well.
Absolutely. Put the name, the acronym AI on anything and people get excited these days. Thanks for that, Mangalam. Let's go back to, I think, Vivek. Vivek, you've got data on all those mega recent block deals we've had?
Well, absolutely right. Good morning. After the spate of block deals that you're seeing in a lot of these well-tracked counters, a lot of the companies are actually part of passive indices like MSCI as well as FTSE. Yesterday, we had highlighted, that there is a chance that there could be an ad hoc inclusion or a weight increase in a lot of those names. And along expected lines, FTSE, in fact, has gone ahead and notified, the members that in the following stocks, given the fact that there has been increased free float market capitalization room, what they're going to do is on an ad hoc basis, there will be an adjustment on June 23rd. So during the trading session of June 23rd, you will see inflows. So Shriram Finance, post the large block deal, will see inflows of close to $19 million. HDFC AMC will see inflows of close to $16 million. And Timken India, too, will see inflows of close to $9 million. All of these are estimates, from Nuvama Alternative Research.
Okay. All right. Got that, Vivek. Thank you for the details over there. Sonal is joining in. We saw a bit of a spike in crude oil prices overnight. Sonal, so tell us, should we watch out for any specific stocks there?
Yes, the oil producers, of course, the likes of ONGC will be in focus. Right now it's flat, but overnight it spiked to levels of $77 a barrel. And it was led by US inventories falling down by 1.2 million barrels. So that's a big amount. This versus an expectation of addition of around 3 million barrels of inventory. So that has come as a surprise. So we will see some positive reaction on ONGC after yesterday's rally of around 2% and fear of slower demand also after US Fed commentary is something which is leading to these movements on oil prices. So we'll be tracking that closely. For now, ONGC will be in focus.
All right, Sonal, thanks very much for that. So that's basically the list of stocks you need to watch out for. Just a quick recap. Stocks with positive news flow are TCS, Z, Delhivery, LTI Mindtree, Shriram Finance, HDFC AMC, Timken India, and ONGC, while stocks with negative news flow are Sansera Engineering and Allcargo Logistics. Let's now focus on the brokerage notes to which will be sort of in focus. The big ones. Surabhi is back to Surabhi with that. Surabhi, what are you picking up?
So I'm picking up two brokerage notes. One on Tube Investments by Motilal Oswal. They have a buy rating with a target price of 35.60. They say they expect recovery in the engineering business in FY24. Along with that, the EV business is moving from the investment phase to commercialization phase. The engineering business is expected to grow in double digits with a scope of margin expansion. The metal formed business is to grow at 10% and the cycle business is also expected to recover in FY24. And they are building capabilities in the export market as well. So all positive triggers for Tube Investments. Next on my list is Emami. Now Goldman Sachs has written on it with a buy rating with a target price of 500. They say there are twin tailwinds that will play out for the company. One is the improving rural demand and the second is the moderation of input costs. Now they believe that Emami's EBITDA growth over the next 2 years will be significantly higher than what it was in the last 6 to 7 years. There was weak summers which would impact the demand in Q1, but the non-summer portfolio is likely to see a healthier growth pickup going forward.
All right, Tube Investments and Emami, thanks very much, Surabhi, for that. More sort of broker calls as we go along, but there's full 30 minutes to go for the pre-open session. We'll take a break here. Up next, Deepan Mehta, Director at Elixir Equities with some specific stock talk. A little later after that, Amit Mahajan of Paras Defense joins in to talk about their new orders and business outlook going forward. Stay tuned.